Hello and welcome to the Secrets of How to Buy a Home in 6 Easy Steps. My name's Kerry Davies and I'm a realtor at Remax Camosun in Oak Bay here in Victoria. We have lots of ground to cover, so let's get started and get into it. Step 1, get pre-qualified for a mortgage. So what does that mean? It means going to your banker and find out what sort of home or what value of home you can afford. And if you haven't done this, stop what you're doing right now. Don't look at any properties until you have completed this step. So what you want to do right off the bat is meet with your mortgage lender. Now, I usually recommend C3 lenders, no more than that. So there's a couple of reasons. You want to see 3 lenders so they can compete for your business. Believe me, they're going to want to get your business. The second thing is the reason why you don't want to see more than 3 is because seeing more than 3 can actually have a bit of a negative effect on your credit score. And the one thing you really want to do is protect your credit because credit is very important. So C3, that's fine. They're all going to do credit checks, but don't go to more than that because you don't want to have a negative effect on your credit score. The 40 factor has nothing to do with the age, but it is a sort of a simple sort of calculation for figuring out roughly what you can afford. So the gist of it is take your gross yearly salary, both you and your spouse, add it up and divide it by 40, and that's going to give you a number, and that's the amount that you can afford for a mortgage payment on a monthly basis. Now it's a little bit of a rule of thumb, but it's fairly accurate. Other things come into factor as well, but I'm going to do a sort of a bonus video following this one and get into it a little more in depth, but it's kind of just a good rule of thumb there. So when you go to see the lender, let the lender ask the questions. This is very important. Don't volunteer any information just in case you say the wrong thing. And what I mean by this is that before you go see the lender, ask them what you should bring to it. You may need a letter from your employer saying what your income is. Maybe just a letter verifying that you're employed and what your income is. Perhaps some T4 slips, this sort of thing. If you're self-employed, they're going to want to see notices, assessments, and put you through a bunch of other hoops. Regardless of that, just get your stuff in order. When you go meet with them, let them ask the questions. So once you've gone through this process and you're all pre-qualified, you want to get a rate guarantee. So what's a rate guarantee? Well, that means it's a period of time or a window of time where that lender or lenders, as the case may be, is going to say to you, we're going to guarantee you a mortgage rate of, let's say, 3.5% for the next 60 days. In some cases, it might be 90 or 100 or 120 days. It's going to be depend on the lender and sort of what sort of products they're offering at that time and how competitive they are. Get that rate guarantee in writing. Now, there's a couple other things you have to consider here. Is down payment and closing cost. Now, down payment is the amount of money that your earnest money that you're going to put down towards your purchase. So, for example, if you're buying a house or a property for $450,000 and you're going to have a mortgage of $400,000, then you're going to need $50,000 cash to put down there. There's different types of financing out there. There is some products available where you don't put any money down. Scotiabank has a very good product entitled or called, pardon me, the free down payment. I like that product a lot. If that's the sort of thing you're looking for, and I can certainly connect you up with my good buddy Shane Martin about that at Scotiabank. But conventional financing is typically is 20% down. So if you're buying like a $400,000 house, to keep it conventional, you're going to need 20% down, which is $80,000, and that avoids any premiums you have to pay if the loan has to be insured. If your payment is anything less than a 20% down payment, there'll be some insurance premiums in there. I'm not going to go into that in detail. You're going to have to ask your lender and they can explain that to you. Also, something to consider is closing costs. So what are closing costs? That's legal fees. I'd factor or budget probably about $1,000 for that. Well, one very big thing to think about, if you're not a first-time buyer or if you're a first-time buyer and you're buying a property that exceeds $425,000, in British Columbia, you're going to have to pay what is called the property transfer tax, and that tax is 1% on the first 200,000 and 2% on the balance. So, for example, on a $400,000 property, that's a $6,000 tax you have to pay. So please keep that in mind when you're purchasing. All right, so that's kind of step one. We've got you pre-qualified for a mortgage. Have any questions? Give me a call anytime at 250-370-7788 or email me at kerry@kerrydavies.com.